Hi guys, welcome to a new video. Today I'm going to be discussing Warren Buffett and the recent announcement in the quarterly results on Saturday of how much share buybacks Berkshire has done this year, this quarter. This is important because Buffett has made it obvious before in recent years that he only buys shares when he thinks Berkshire is significantly undervalued. He has made claims and statements before about, he thinks it's irresponsible for executives to buy back shares at any cost on any timeline. No, it's the same as any investment. You should ensure that the thing you're buying is actually undervalued. And I think, first of all, that's the right way to go about share buybacks, and it's not the way they're mostly done. But also, just there's an interesting point of view is this a signal that Berkshire is undervalued? Obviously, Buffett probably thinks it is. Or not? Is this an opportunity to maybe buy into Berkshire? That's the question we're really going to look at today. So just here you can see, a record 9 billion this quarter, or last quarter now, and that is virtually 3 times the UBS estimate. And most of that was in the Class B shares, which are the cheaper ones, I believe. The Class A are the $300,000 ones. And yeah, that's interesting because he's been quite active recently, and obviously this hasn't been a great year for Berkshire. It's been hit quite hard, as most companies have been, and he's made some decisions that people have questioned, but also some decisions that look really good. From the selling out of all his airline stocks earlier in the year, bank stocks, etc. Really, it leaves Berkshire in an interesting place. Now, the question here is this a good time to jump into Berkshire? Does this mean the stock's going to rally? Are we looking, at a positive future for the company? Obviously, its performance hasn't beaten the market the past few years, and that's a big thing for saying that Buffett's, no longer the investor he used to be. I don't think that's true. I think, as every value investor will say, the market comes in cycles. Sometimes value investing outperforms, sometimes it doesn't, and it will probably come back. Highly likely that it'll come back. But yes, so moving on from that, as I just said, you can see this quote here from Buffett in a 2015 interview. He says, many managements just decide they're going to buy X billions over X months. That's no way to buy things. You buy when they're selling for less than they're worth. So that's just to reinforce he's buying here. That probably means he thinks the company is undervalued. Now, is that enough for me as a value investor to go and buy the stock? No. So if we, delve into the actual company itself, looking at simply Wall Street here, you can obviously see that their snowflake analysis is pretty poor for Berkshire. This is for the A shares, and that's not great. But do your own research. Don't just go off this chart, this snowflake analysis. You need to do your own research because some of the stuff they look at is not that important, I would say. Like large one-off items impacting financial results, I wouldn't call that a negative. If anything, I'd call that a positive because you look at those kind of things for having a short-term impact on the stock price, and these are going to normalize in a year or two, and that's a good time to buy. So I wouldn't necessarily trust some of it. But it's really useful for the data side of things. And if we look at some of the data, you can see that the valuation of Berkshire is above the market at 22.9. The industry is 6.7, although to be honest, I'm not quite sure what industry Berkshire is being compared to here because they own lots of different companies in lots of different industries, so it'd be interesting to know what that comparison is, but it's above the market, and as a result, probably above its industry. And yes, you can see here on their analysis, they say it's overvalued, virtually 40%. The price to book value again shows that it's overvalued at 1.3. And the future growth here is really the bad part of Berkshire. There's a forecast annual revenue growth of 5%, and not great. Let's just say if you put those charts into perspective there, they're not great. Obviously, there's an NA there for the annual, but earnings, but it's not at market level, and people aren't expecting it to be at market level. Here at the EPS here, you're seeing it decline. This is only on one analyst, to be fair, so this might be misleading. Again, so take it with a pinch of salt. But yeah, return on equity only slightly below the market. And an 8.6 historical earnings growth. Really what it comes down to here is, what are you looking for in a company? I mean, obviously here, the financial strength of Berkshire is high, low debt, etc. It's great for that. It's whether you're looking at other things where it becomes a problem. You know, personally for me, I've run Berkshire through my checklist this morning that I use really to take out the subjectivity from it, from investing in obligate stocks, and it failed. And the reason for that is lots of different things, I think. It's really on the value side that it fails. On the health side, it's great, but when you look at the value metrics, it's looking overvalued. And that's my personal point of view. Again, do your own research, form your own opinions. I think the price is still a little steep. Now, this could have happened for a variety of reasons. Although Buffett has previously said he buys back when the stock is undervalued, it could have just got to the point where the company is so flush with cash, so underperforming for investors, that he's just decided to bite the bullet and invest. He's done certain, really changes of opinion before. Obviously, earlier in the year, he bought gold stocks, which, is something he's always avoided. Gold, the asset itself. I mean, it's not the same thing. People often equate buying a gold stock to buying gold. It's not the same thing. He is not saying gold is a store of value there. What he's saying is that gold is acting like it because people think it is, I would say. I'd argue that he's looking at the market saying, wow, gold's appreciating, that was good. It's still a commodity, it's still used for certain things, but really it's a store of value. And, we can capitalize this through the gold miners themselves rather than through the commodity. And that's a good way of looking at it, and it means that he doesn't have to buy into gold, which is a speculative asset. I'd say even more so than stocks, especially if you've seen the volatility this year of gold moving in tandem with stocks up and down rather than in opposition to them, which is what's supposed to happen. But yeah, I'd say it wouldn't be completely shocking to see a U-turn here on why he's bought back shares here. It could be for investors just because of the importance of the stock. Or it could be because he thinks it's undervalued. Maybe he's a lot more bullish on the recent acquisitions he's made than others. It's really difficult to know. And that for me is the reason I probably wouldn't buy into Berkshire at this point. I think it's an interesting time to analyse it, an interesting time to look in. That's why I did my analysis this morning. That's why I thought I'd put up this video. But really, at the moment, it's not looking like a good enough value play for me as a value investor. I think it does create a good diversification for portfolios. I've seen that suggested before, because there are so many industries, so many companies that they own, that they invest in. Berkshire is so diversified. So buying into Berkshire is a huge amount of diversification. Now, obviously, that's not an opinion Buffett would probably agree with. Hates diversification. But I think that is an interesting option if you wanted to do that. Obviously, for the A shares, that's a very expensive method to get that diversification. But there are other B shares, the less expensive shares, and that way of doing it. So yeah, personally, that's what I'm looking at. I'm looking at it's not the right time to buy into Berkshire. Maybe it will be eventually if the price comes down more. We'll really see, I think. I mean, you can see today here, but the stock hasn't really reacted positively to this buyback news. And it's difficult to know the reason for that, but whatever it is, who knows? I mean, you can see, actually, to be fair, in the overnight, it did. Pre-market seems to be, and then as the day, it's traced down slightly. So there has been a kickback, to be honest, from that announcement. The close on the 9th to now being up here, so it gapped up, basically. So that's good. That showed the market has to take it as positively, but now it's declining slightly. What you'd expect, though, a little bit of taking profit, a little bit of trading back on that return. It's obviously a big jump. In worth, actually, it's a ridiculous jump. It's about 18 $20,000 that if you owned Berkshire, you would have got this weekend, which is crazy. That's just the nature of how expensive the shares are. But yes, that's what I would say. Currently, it's not a buy for me right now. But obviously, still a fascinating company to follow. It's still fascinating to watch Buffett's moves. But yeah, even with the buybacks, it's not a buy for me yet from a value point of view. But obviously, Buffett disagrees with me, and Buffett's, a legend, so I could be wrong. I'm not trying to say I know better than Buffett. I'm just giving my point of view for entertainment purposes. So yes, as usual, disclaimer, I'm not a financial advisor. Please do your own research and form your own opinions before investing, and enjoy the process. And thank you very much for watching. Please like and subscribe if you enjoyed. Thank you very much.